we talk about smart money concepts, in my own perspective, smart money concepts have to do with this tree of items that I've just had on my screen here. All right, which I have to talk about. You need to understand what market structure is. You need to understand what liquidity is. You need to understand your entry and also your management. All right. So I'm talking about management. That's to do about the trade management, the risk management, and also psychology. All right. So all of these things is what I will be explaining in my subsequent videos. All right. But for me, every of those things that is before you here, okay, it is what is going to give you a trading edge in the forex market. So if you have the proper understanding of what market structure is, bringing the understanding of liquidity is, as one of the traders I respect so much used to say, that liquidity is your brother. So you need to understand him. If you understand liquidity so well, it's going to pay you off. So it's going to pay you well in your trading. So you understand. Then also entries, which has to do with the timing and the trading management, the risk management. Also, a lot of people have a very good understanding of market structure, liquidity, and their entry is top notch, but they don't understand what risk management is and trade management, and that is exactly what is messing up their trading career and also being consistently profitable in the market. And also, above all, psychology, because why? For these three things to work well, all right, because a lot of SMC traders focus so much on understanding market structure, even to the advance, some understanding liquidity, why some don't even understand liquidity, and focus so more on entries, all right, and leave this psychology part out. And they'll just see that everything is just falling apart for them. You understand what I'm saying? So I will be taking you by the hand to explain this to you. But for today's video, we'll be focusing on market structure. All right, then in my subsequent videos, I'll be explaining how I relate, or how I trade liquidity in the forex market, and also some of my entry models will be shared along with you, my risk management approach, and also some psychology tips, which is going to help you to win in the forex market. Do you understand what I'm saying? So without no further ado, let us move. Okay, so let me clear off my my drawings now, my annotation. Okay, so let me clear them off and let's move. All right, so okay, let me go to the next slide now. All right, so in understanding what market structure is, I have these four things. I think I made a mistake here. I made a mistake here, calling it three things. All right, but because why? This one here stands out. The fractal nature of the market stands out. All right, I think I need to change my color back to red. All right, just follow me through. What I'm about to share with you is going to change your perspective and view about the market. You understand? Whether you're a beginner, intermediate trader, or an advanced trader. Do you understand what I'm saying? Yes, so let me clear with my drawings. So I said three things that you need to know to understand market structure. All right, these are the three things that you need to know to understand market structure, at least for the basics. You understand what I'm saying? You need to have a proper understanding of the market structure elements, all right, and also have a proper understanding of the market structure types. Then also understanding that we have primary structures in the market and we have secondary structures in the market. This number three is one of the reasons why a lot of people lose a lot of money in the market, confusing the primary structures to the secondary structures, and also the secondary structures not applying it properly in the forex market. Do you understand what I'm saying? So just follow me through this video. It's not going to be long, but and it's still going to be long, but the value that I'm giving to you is what is very important. All right, and please, is a part of the way to support this YouTube channel, ensure that you give me a subscribe button, give me a like, and share this video to a trader out there that needs to understand this. So for today, I'll just rush through what the market structure element is, but what I want to focus on really for this video is understanding the market structure types. So I'm going to explain this to you in a way that it connects with the psychology of price. Do you understand what I'm saying? Okay, so I'm going to clear this one out now. Okay. I'll go to the next video, to the next slide. All right. So yeah. So very quickly, I'm going to rush through this one. All right. So, this is very one of the most simple things that you see out there about market structure. But to me, these are the elements of market structure. I categorize price and time as element of market structure. So which means that what you see on your chart is what the relationship of price with time at that particular moment. So that means that there's always something that price is doing at a time. So which is going to lead us to the price cycle. All right. So which is going to lead us to the price cycle. Sorry. Where's my annotation tool? Okay. So I said price and time. So what this means is that price can only do one thing at a time. There's always one thing that price is doing per time. And which understanding what I just said now is in this price cycle. All right. So that's why I categorize price and time and also price cycle under the element of market structure. These are like the skeletons that you need to understand, because when you open your chart, especially in the Forex trading, there's always a logic behind everything. So when you understand the logic behind it, is going to be very easy for you to relate with. Sure, you get what I'm saying? So price cycle. All right, price cycle. So it's it's very simple for you to, if you're a good student of the Forex trading and you have a good background, you'll have heard about consolidation, you have heard about expansion, you have heard about correction. Sure, you understand? So I have all the drawings before you here talking about consolidation, price creating relative highs and relative lows, relative highs and relative lows. And also the consolidation can be something like this also, pardon my drawing, something like this also. But however, we are in a range. Do you understand what I'm saying? We are in a range. It can be something like this also. So just going sideways. Do you understand that? Just going sideways. So this is also an example of what a consolidation market is, okay, which is part of the price cycle, and also the expansion also, and we have the correction. So what this means is that price can only do one of these things at a time. Price cannot do the three of them at the same time. Price can only do one of these at a time. All right. Price can only consolidate, expand, and correct. It cannot do the three of them at the same time. So do you understand why I had to bring price and time to be the number one element of market structure? There's always something that price is doing per time. You understand? So in the cycle of price can now consolidate at that time, or in the cycle of price can expand at that time, or in the cycle of price can correct at that time. Do you understand? That's very simple for you to get. So let me move to the next thing. Let's go to the next slide. Okay. Just to make things fast, that's why I had to prepare that for us to move without repetition. Okay, you can watch this video, go over this video as much as you can for you to understand what I'm trying to explain to you. So now I said that 3 things you need to understand when it comes to market structure. When you understand these 3 things, it's very easy for you to relate with what your chart is telling you, the logic behind it, the skeleton behind it. And I said the number one thing that you need to understand, all right, for market structure basics, okay, is what you need to understand: the elements. Okay, I've explained the element to you, which is price and time. Okay, so the elements is what? Price and time, and also price cycle. All right, so these are the things that we have for our price market structure elements. Okay, so we are now in our types of market structure. Do you understand what I'm saying? So, which means that both the elements and the types have to come together. So, what this suggests to you is that there are various price cycles that place themselves or that plays out in the types of market structure that we have, both the uptrend, the downtrend, and the sideways market. All right, so I'm going to explain the logic. Don't forget the logic. What you need to understand is the logic behind it. When you understand the logic behind it, it's going to be very easy for you to relate with. All right, so for a layman, as you can see, uptrend basically means that something is going up. All right, as you can see, this particular one going up, and also downtrend means that this guy is going down. Why this one here is only going like that consolidation. All right, and I'm going to explain to you why I said sideways here and not consolidation. Okay, so I said logic. All right, now I told you that price can only do one of those price cycle per time, which is what? Expansion, all right, correction, and consolidation. Those three things. It cannot do the three of them at the same time. So when you open your chart, it is either price is consolidating, or price is expanding, or price is correcting. Okay, now in this particular uptrend, I want to ask you a question. Let me see if you are going to get that right. Okay, in this particular price type of market structure, which is uptrend, what exactly can you see here? Okay, what type of price cycle can you see in this uptrend? And what type of price cycle can you see in this downtrend? Okay, can you give it a try? I want you to give it a try. All right, what type? What is that formation of price cycle that you see in this uptrend and also in this downtrend? So let me clear my drawing for you. Okay, I said logic. Understand the logic behind it. When you understand the logic behind every forex market strategies, every forex market education is going to be very, very easy for you to relate with and replicate at your own pace. Do you understand what I'm saying? So without no further much ado, let's go. So I said to you that price can only do one of the price cycles per time. So if you see this this uptrend now, you could see, okay, let me not use the arrow here. That was a mistake. All right, so let's go back to our drawing. Okay, so if you see this particular price cycle, all right, price was expanding. After price was done expanding, it was what? It was correcting or a retracement. After price got to a certain level, in a particular point in time, price did what? Price expanded. All right. So after price got to a certain level, again, price did what? Price retraced or corrected. Because in the forex market, something, price cannot just be going like this. All right. It moves in a kind of a zigzag manner. All right. Like zigzag manner, up, down, up, down, up, down. Till price gets to a particular point, then price shifts again to downtrend. Okay. After it has gotten to a certain level at this side here. Okay, so what I'm trying to explain to you is that price can only do one of these things per time. So in an uptrend market, we have combination of two things. All right, that is very, very obvious. Okay, we have what is my this thing now? So we have two things that is obvious here. We have expansion and what? And correction. The same thing also for the downtrend. Also, we have expansion, correction, we have expansion, correction, we have expansion, and also expansion, correction, expansion, correction, expansion. Why this one here is only just moving sideways. Do you understand what I'm saying? So as I said, that I want to explain the logic behind it to you in how it relates to the psychology of price. Do you understand what I'm saying? But before I go further, one of the other thing, when you see this kind of movement in the market, okay, let me clear this one. When you see this kind of movement in the market, all right, what it means is that the order flow that we have in the market, this order flow that we have in the market, there's a particular order flow that is inside of the market. So what it means is that the buy orders in the market, when you say market has to do with someone buying and someone selling. Do you understand what I'm saying? So it has to do with someone buying and someone selling. So at this particular point in time, all right, the buyers in this market outweighs the sellers. Okay, so which means that the buyers has an upper hand in this particular market. Do you understand what I'm saying? So which means that this kind of movement in the market is called a bullish order flow. Bullish order flow. All right, because another name that it is used for if a market is in an uptrend, okay, another name that is called, another term or another time that is called in the forex market is what? That price is what? Is bullish. So let me bring that out for you. Let me drag this to the left. I think this guy is too big. Okay, so that means that we have bullish. You can say a bullish market. If we don't want to say uptrend market, you can say a bullish market. Okay, why also for downtrend it is called, downtrend market is called a bearish market. Okay, you can also call it what? A bearish market. A bearish market. Okay, so why a sideways market is called where's my arrow? The sideways market is called sorry. Okay, sideways market is called, where's my arrow again? Yes, so did I get this right? Yeah. So I think I had that one twice. Okay, so it is called what? It is called an accumulation or consolidation. Okay, that price is actually accumulation. So I will explain what I mean by accumulation and consolidation to you. All right, so that's why I'm actually using the word order flow for you. Okay, it is orders in the market. It is the order that is being pumped into the market. So the orders that is being pumped into an uptrend market is more of buys, and buys. All right, that's why the people or those that are pushing the market here are just buyers. They're just pushing the market higher. All right, so when price retraces to a particular level again, then boom, all right, we have this push. Then after price retraced again, what happened? They bought higher again, boom. All right, so do you understand what I'm saying? So what we are having is the flow of buying orders into the market, or the flow of bullish order, or the flow of buyers order in the forex market. I said that the two people that participate in the market, if there is nobody to sell, all right, and there's nobody to buy, there's nothing called the forex market. And that's just the normal definition of where a marketplace. A market is where a transaction a market is where a transaction happens between the buyers and the sellers. So if there's no seller, there's no market. If there's no buyer, the market is not balanced. So for there to be a balance in the market, someone has to be selling at this level, all right, and also someone has to be buying at this level. So I will explain the psychology behind this to you. Okay, I just want you to follow me to the end of this video. All right, it's very, very, very educational, and it's going to change your life. All right, so the same thing also applies for the bearish market, okay, or the downtrend market. Okay, so what it means on the other hand is that we have what? Can you give it a try? We have what? A bearish order flow. Do you understand that now? So we have a bearish what? A bearish order flow in the market. The same way I explained the bullish order flow to you. So what it means is that the sellers are in control. It's as simple as that. A very simple English. Sellers are in what? They're in control. So which means that in this market right now, those who are participating more in this market is what? They are the sellers. All right, the sellers are just pushing price down. After a little bit of retracement into this level, then boom, price push to the downside again. After a particular retracement to this level, then boom, price push to the downside again. Do you understand what I'm saying? It's very, very simple. It's order. All right, it's not just, so when you open, don't be confused about the candlestick, don't be confused with that. It is just the flow of a particular type of order pattern. Do you understand now? So take for instance, you could see that a time where Bitcoin was just going up or just going up. What it means is that the bulls are in the market. We have more people investing. Do you understand? We have more people investing into the market, and that's why you hear the word like buy low and sell high. Buy low and sell high. Do you understand? So what it means is that they are waiting for price to enter into discounts, then they invest their money at that particular point in time, then allow their investment to grow. It's as simple as that. It is order. Anytime you open your chart, I want you to understand this. You want to be able to perceive price as what? As order. Okay, what order is being pumped into the market at this time? So how do I participate in this kind of market? Do I want to buy or do I want to sell? So you buying and selling in any type of market or any kind of asset or instrument will be dependent on who is participating currently in the market, who is currently in control of the market. Is it the bulls or the bears, or price is accumulating? So that's going to lead me to the psychology behind this accumulation also. Some people, you will hear some people tell you, don't trade the consolidation market, don't trade the consolidation market. Yeah, it's true, very right. But however, I'm going to show you how to perceive this kind of market structure. Okay, now I said in the element of market structure that it is called consolidation, but in this type of market structure, it is a sideways market which also have something it is communicating, all right, which I'm going to explain to you right now. Just follow me. Okay, so what this means is that when you see a sideways market like this, all right, what it means is that price is accumulating orders. So let me write that out for you. The same concept that we spoke about, the bullish order flow, the bearish order flow, this one is also what? Accumulation of orders. Okay, so which means that there is a contention in price negotiation. Okay, when you see your chart, that's why I have to tell you about, or I have to introduce you to what is called the element of what? Element of market structure, which is number one, price and time, and number two, price cycle. And I said to you that there's something that price is doing at a particular point in time. So at this particular point in time, according to the market structure element that I talked to you earlier, okay, it means that price is actually gathering orders at a particular level or at a particular time. All right, there's a lot of what? Negotiation that is happening at this point. Okay, so what is now going to happen, or what is going to be the decision point, is whichever direction follow. Just understand what I'm saying. So whichever direction the price goes to will tell you who is now in control of the market, or who later took over, how much order that we had in this level. So what it means is that if the sell orders, the price is actually accumulating in this consolidation market. If we have something like this play out in the market, okay, then boom, to the downside. So what, in fact, let me draw that one very, very, very carefully and clean for you to see. Okay, so let me bring out my arrow. Okay, so when you have something like this, then we have something like this again. So we have something like this in the market. Then price did something, which I'm going to say to you now. Okay, so price came up again. So price came down again. Okay. Don't forget that I told you that part of the price cycle is what? Expansion. okay? But what makes a sideways market different is that it accumulates orders before expanding, okay? Now, in the uptrend markets, please don't let me lose you. Just follow me. In this uptrend market, there's only two things that is evident, which is what? Expansion, correction. Expansion, correction, or retracement. Expansion, correction. And also a downtrend. Expansion, correction. Expansion, correction. Expansion. That is the order flow, all right, in this particular market. But in the consolidation market or the sideways market, it is what? Accumulation and what? Expansion. That's the only thing that happened. Or better still, let me use this simple term for you. After price accumulates orders in this particular level, price is going to distribute to whichever direction, all right, to whichever direction the orders it accumulated in that level. So if the buy orders outweighs the sell orders, what we are going to see in price, what we are going to see, sorry. So what you are going to see in price, okay, is this. You're going to see, let me change my color to black. So what you're going to see in price is going to be something like this. Price is going to come up like this, okay? Then price is going to come down like this. Then price is going to come up like this and expand to the upside instead of expanding to the downside. Because why? The buy orders has outweighed what? The sell order. So after accumulation, what you expect in the market is what? Is distribution or what? Expansion. Do you understand what I'm saying? So, however, if you want me to continue this series, which I just start, this is part 1. All right. If you want me to continue what I just explained to you, to take it further for you, which I'm going to take more deeper into the psychology of price, that I want to explain to you the formation of the uptrend market, the downtrend market, the sideways market, what exactly happened in a more advanced way. You understand what I'm saying? Just give me a comment section. In the comment section, let me know your response or your view, or if you want me to continue this particular one. All right. So if I have a good response in the comment section, I'm going to continue this. So that means that you guys really enjoyed what I'm trying to teach you. So do you understand what I'm saying? So thank you for staying through. Okay. I want you to give this YouTube channel a like, and this video also a like, and also subscribe to my YouTube channel and turn on the notification bell.